Hi everyone, hope you're well. This is CoinsKid. Just going to dive into Harmony 1 right now. As you can see, it's recovered really, really well. And before I begin, thank you for your support. Thank you for everything you do in the channel, okay? Really do appreciate it. Really do appreciate the kind words and the commitment and the sharing is caring and everything you do towards the growth of CoinsKid here. Thank you very much. So it's all good. So right now, Harmony 1, just as anticipated, it has rolled over because it was getting a little bit overextended. I said in yesterday's video, if it just starts to roll over, you do want to see a back test of this support, and that support being the yellow line, because you can see what it's doing is it's adhering to it. It's making these high lows. Do you see this? So the more it continues to do this, the more it's going to force it, the more it's going to create a sort of ascending triangle type pattern of that level of resistance or whatever it finds itself up against. We will look at that in a moment. And the more it forces it to pop out and test the next level of resistance, so on and so forth. So that's how it works. You want to see your project back testing the EMA in the 4-hourly time frame in a bullish cross as support, because it shows an uptrend and continuation. You do know that we've got the broader Elliott wave theory going on for 1. Okay, but just because we've got it going on and as a theory, it doesn't necessarily mean it has to happen, but it's something that's on the table, okay? Something that we do need to be aware of in the long run is this Elliott wave theory. But I won't dive too deep into that at the moment, because we're looking good. We're looking good for continuation right here. And again, this is what we do. We show you levels of resistance marching forward, future price predictions, and potential fallback and support targets that you can't afford to lose. Off the bat, we'll drop the Fibonacci from the top there, and we'll go to the bottom of the impulsive wave just there. Move it across, and you can see what's happening with 1. Basically, you can see that it's gone up in a massive impulsive wave there, and it's now starting to correct just here. So it's gone up, it's topped out, and it's basically rolling over, and it's starting to fall back and retrace and find levels of support. Well, it's found this yellow line here, which is the 20 EMA on the 4-hourly time frame. So you can see that what it's doing is it continues to hold this level of support. It's going to creep up, and it's going to actually be forced into testing this high. Do you see this? Taking out that high and then marching on. Failing that, if you do start to fall out of this right now, you do need to target this particular level just here. This is a golden ratio. If you start to see yourself lose that, okay, for 1, then you will be looking at a reversal wave back down to where you've formed this impulsive wave. It's a complete reversal, basically. It's just a big back to where you came from signal if you start to lose the golden ratio. So you can't afford to lose 1. You can't afford to see 1 start closing any lower than that particular level right now, because if it does, reversal back to where you came from, and obviously you're going to form that bearish cross. You're going to fall through the EMAs, you're going to lose levels of support, you're going to start potentially making higher lows, and you're basically reversing this reversal that you've got on the go right here. Do you see this? Because effectively what you're doing, you're making these higher lows and higher highs, basically, if you can continue to march on now for 1. So you've now got your key levels of support, okay, which you can't afford to lose that particular level there. You could effectively still see 1 come down. You could effectively still see it roll over and backtest that support, okay, and then come back up and then potentially lose that and backtest that support, which would be perfectly fine. But if it did start to come down and lost this as support like this and started backtesting it, then that is a reversal pattern right there, and you would be looking to send a short. Look at shorting 1 down to that level there, which is a 19% correction from that particular level of support that it may potentially lose. But in my opinion, it's looking relatively healthy for continuation, okay? So I don't want to scare you. It's looking relatively healthy. So what we're going to do is lay down a future price prediction. If and it's a big if, okay, if this is the corrective wave done and it's found support off this particular level here, and now it's started to march up in this next impulsive wave, we can lay down a price prediction for yourselves right here, okay? So using Fibonacci, what we do, we go to the bottom just like that, and we bring the Fibonacci up and we put it on the top just like that, and you can see that now potentially 1 has come down, rolled over basically, corrected, added small correction, and now it's looking to march back on. And if it was to march back on, you could potentially see 1 march to this particular price prediction just there of 17 cents, okay? So that's a nice price prediction based off whether or not it does start to form this next impulsive wave, break this high, okay? It needs to break 15,2362. If you start to see it break that high, then you've got a lovely little pump from here of around 25% for 1, and that would actually start to look really healthy, okay, and get you back up there, because you can see just how much you've got to work to actually get back up to that high. And another thing, full transparency with you at all times, if you're watching a VChain, the XRP, all them sort of videos, we are anticipating this Elliott wave theory, and like I said in every single video, the only way that Elliott wave theory is going to get invalidated is if you break that high right now, okay? So that high is currently like this, at 24 cents roughly. That's the all-time high, I believe, for one in this market. So basically you do need to see yourself march on here, pick up, march on, and then what happens there when you start to form that next impulsive wave and potentially top out at that particular level, roughly around there, you would hope to see, this is what you want to see, this nice organic growth where it starts to roll back, finds another level of support just there, just like it is here, find another level of support, which is potentially the swing high. So you could target that as a buyback zone, so you could sell, buy, basically not financial advice, and then you would start to form another impulsive wave up, potentially taking you up to that high to break it and march on and get that full recovery in and make those new highs, and then invalidate this larger A, B, C correction that we've got going on in this Elliott wave theory right here for one. Because obviously that the ABC correction is more downside, basically. It's a lower low than this, and so we don't particularly want that, but that's something that, with full transparency and honesty with you in the channel, it is a potential play that you could actually roll over and start creating lower lows, basically, and just, you know, contribute towards this downtrend that potentially one is currently in it. Because there's no avoiding the fact at the moment it is in a downtrend, but on the 4 hourly time frame it's looking relatively bullish. It's picked up, it's showing a reversal pattern, so you do need to see it adhere to that and start marching on and making these higher highs and these high lows in the 4 hour. But on the grand scheme of things, on the daily, especially if you look at the daily, it's going to be a bit messy. So on the daily, you know, you are still in a downtrend because you rolled over, you're making a lower high and lower lows. Okay, and if you roll over again, you're making a lower high and potentially coming down and making a lower low. So yeah, you do need to see it march on. I'm not going to feed you no spiel. You do need to see it march on and break those resistance levels that I've just outlined to you for one. Yeah, so that's it. Full transparency going forward. Always be truthful, always be honest. But right now, hopefully we've come up, made this impulsive wave, corrective wave down, bouncing off this support line now, which looks good. Look at that nice little candle there. Looks good for continuation, making these high lows, forcing us up, back testing this EMA. Beautiful, beautiful, beautiful. Break through this level of resistance, onwards and upwards to that particular price target up there. I do apologise for all this mess, something like Picasso. Okay, take care everyone. See you soon. Stay strong, stay healthy, and most importantly, stay tuned. I'll be back tomorrow with another one update for you. Bye bye.